So there's a new stock that I just added to my 3-year-old's daughter investment account, and that is StarBUX. What's going on, guys? It's Ricky with TechBud Solutions. I posted about it on my Instagram. There was so much feedback on please make a video about why you're choosing to invest in this stock. I didn't even share the stock because I don't, even with this video, I'm sharing the company that I'm investing in. I don't want you to copy it. If it doesn't align with your criteria, I'm not like the crypto bros. I'm not offended because you don't see eye to eye. If anything, if there's something that you think that I should know about this company, and to learn more about the risk, share it with me. Share it with me in the comment section or share it with me via Instagram. If you don't follow me, it's the third link in the description down below. I love sharing ideas, not because I think I'm right, but because it's my opinion. And at the end of the day, we're all here for the same reason. It's to either make money trading, that's more in the short term, or in this case, for my daughter that's 3 years old, to make money investing over a long period of time. And one of my favorite times to invest is in good companies that are actually good deals. Very simple criteria. So I'm going to share why I think StarBUX is becoming a good deal, my intentions, the exposure behind this investment, and kind of just go from there. So first off, how did I come across StarBUX? I've been paying attention to it recently anyways. If you guys have not seen the stock, StarBUX has recently seen a retracement from highs of 115.87. That is right around March. And it's been on a pretty consistent decline. It's now trading at lows of $78 per share. I think we purchased it right around $79 to $80 per share, I think on Thursday. With that being said, first thing, it's a super small position, right? So should you invest in StarBUX right now? The very simple answer is it all depends on your intention. If you are trying to make money right now, my straight up answer to you would be no. StarBUX is selling off. StarBUX has been making lower highs and lower lows. If we look at it on the day time frame, again, I like to be very straight up with you guys. Lower highs, lower lows, direction is bearish. So therefore, it would be naive for you to think that just because you decided to buy or because I decided to buy, that now all of a sudden StarBUX is going to recover. No. That's not how it works, right? It's, well, what is my intention? Well, I think StarBUX is a good deal long term. I like how much it's recently pulled on back from previous highs, and the recent retracement, it has sold off about 32%. I love that because now it offers about, if I'm not mistaken, from the current price, about 47%? Yeah, 47, almost 48% of potential recovery. That doesn't matter, right? Its current trend, current direction is bearish. So therefore, I need to make sure that I understand that. So what is my intention? I invested only a few $1,000s for my daughter's investment account, respecting that, yes, I like the company, and I'm going to explain why, share some of the fundamentals with you, but I know that there is more potential downturn ahead. If we just look at recent lows, this is just a few months ago, we could see that we hit lows of $74. It looks like that's kind of where we're headed. And if we look at lows of 2024, nearly a year and a half ago, we have, again, I love doing this because it in my opinion, you should never convince yourself or sell yourself the dream of what's the best case scenario. If that's what you're doing with the trades or the investments that you're taking, you probably follow a bunch of hopeful and naive crypto bros, and this most recent downturn probably wiped out your account, right? And it's because you never take risk into consideration. I think the best way to ever approach anything is to highlight all the worst case scenarios. So already, before you even either take the trade or take the investment, you are fully aware of what can go wrong. So therefore, when you begin to decide how much money do I want to put behind this investment or this trade, there shouldn't be a surprise. Obviously, the emotions still follow. Obviously, it still hurts when you have either red days or the investment's not going exactly according to plan based off of your timeline. But you should not be surprised, right? It's better to be prepared than to be surprised. So be realistic. Based off of recent lows, if we end up going to lows of $74, that's about 4.8, almost 5%. If we go to lows of $69, that's about 11 to 12%. Again, I went in with a few $1,000s, literally just nothing. It's just to have some skin in the game. Just like we explained a few months ago with UNH. When UNH was going through its investigation and it fell below $300 per share, I made a video about that, sharing why I think it's a good deal on the fundamental side. But it was still going down, right? The stock was still downtrending, but the company itself was still growing. Now that it's north of $300, now it's like, oh, you see, it's very easy to see now and to say that, wow, look, it recovered. But my intentions were still the same. I'm investing in this stock still somewhat early while it's still selling off. So I have to respect that. So if you cannot tolerate downturn, it makes no sense for you to be buying right now because direction is still bearish, right? Knowing that there's 10 to 11 or 12% of potential downside, and that's just based off of recent lows. It could go even lower, right? Who's to say it can't go to $65? Who's to say it can't go to $45? So make sure that the initial position that you take is a position that you can tolerate. If the trend is still bearish, you need to understand that you are bound to experience some stress as the stock continues to sell off. Make sure that the position is light enough that it doesn't begin to cloud your way of thinking, right? And the way that we approached it when I was speaking to Remy's financial advisor is we were going back and forth with different stocks that would make sense for her. And as soon as he brought up SBUX, I've been watching it, I've been paying attention to it. I said, yes. We agreed on a small dollar amount, and this is why I love having conversations with different people. You might be asking, well, Ricky, why do you need a financial advisor? At the end of the day, you don't need anything. You don't need to be watching this video. But again, at the end of the day, it's really important to hear other people's perspectives. People are wired in different ways, and we all see value in different ways. And at the end of the day, it's important for you to associate or converse with people whose opinion you might value. And he has a much more conservative style than me. And for some of you, I'm not super aggressive, but I'm definitely more conservative than other traders. So therefore, by hearing other perspectives and other opinions, it's not that you have to agree with everything that everyone says, but it's that you cherry pick what you like and what you don't like about different styles. And that's why I enjoy Remy having a financial advisor, because it allows me to have a conversation in a more conservative way, which is the intention for my daughter's investment account. So again, that's something that I can expand on later. You guys let me know down in the comments section if you want me to make more videos about her specific account and our intention for that. But it's literally super simple. So now that we talked about the current trend, it's at lower highs, lower lows. We talked about the recovery potential. We talked about previous lows. Why SBUX? Why is this something that I would care to buy? So first off, let's just talk about the technicals because I have it here. SBUX loves to retrace, and it retraces a decent amount, right? It went from highs of $90 previously all the way down to $45. So it is not, unaware of what pullbacks are. This thing has sold off nearly 50%. But when it sells off aggressively, again, I love to buy deals. I love to buy when there's blood in the market. I love to buy when people are stressing because I can come in, not over leveraged, not stressing out. I have my intentions in line. I have my timeline in mind. I don't need to make money right now. I'm in it for the long haul. And I'm getting in during already stressful times for current investors. This thing recovered 155%. And that was back in 2020. That's a pretty extreme recovery. But back in 2022, this thing recovered 70%. That was after the 2022 downturn. So also, again, a pretty extreme sell-off and recovery. And then in 2024, this thing recovered 62%. And then like we talked about, there's a 47% recovery based off of previous lows. The more it sells off, the closer we'll get to a 50 to 55% potential recovery if it finds a support there and continues to show signs of an ascending support and an ascending resistance. That is what the current trajectory and the current trend on the technical side for SBUX. Technicals only matter so much. So what's going on with SBUX? Again, the software that I'm going to be using, breaking this down, is Investing Pro. You don't have to use it. It's the software that I use to get a better understanding on how these companies are performing fundamentally. If you want 15% off, it's the first link in the description down below, and you can get 15% off for this software. And once you get it, you can pause this video, and we're going to be going back and forth with these flow charts, and that's the pro research that they provide for you right here. So the first thing that I want to highlight is the metrics, dividend yields, right? Dividend payouts have consecutively increased, if I'm not mistaken, 16 years in a row, 16 consecutive years of raised dividends. Again, as someone that's investing long-term for my daughter, that's a benefit for some, right? Wanted to highlight that. PE ratio, 33.9 times its earnings. Not the highest it's been, but also not the lowest. Something to keep a close eye on. It's I would say a little higher than industry average, but I'll explain why. Revenue, $36 billion a year. Net income, $2.6 billion. And again, if you look at its overall revenue has been consistently increasing based off of recent quarters, but net income has kind of been trimming down. We're going to highlight that. Okay, market cap in comparison to its competition, it's at one of the highest market caps. Its 52-week high is at one of the lowest 52-week highs in comparison to its peers, and shareholder yields at one of the lowest as well. Total return in the past year, one of the lowest, which I love because, again, I'm not invested in Starbucks yet. This is a time where it allows me to get in at one of the lowest times, but it's not doesn't mean that the cheap can't get cheaper. And when it comes down to cash flow, let's say that we do enter a recession. Coffee, in my opinion, is recession-proof to some degree, right? And its balance sheet, it has over $5 billion in cash equivalents. I think that's very important for a big company to have cash on its balance sheet, enough cash to really be able to tolerate downturns or recessions if they end up presenting themselves, right? Just like investors or just like businesses, you want to make sure that they're well positioned, that they're not over leveraged or over aggressive during these overbought levels, that if markets do retrace or business does get slower, that they're not able to, keep the lights on. That's, I think, a good way to put it, right? Now jumping into the pro research. Once you click that, it shows this. This is on the fundamental side. So the green bars, you can see that this is its overall revenue. Okay, revenue has been consistently kind of rising. We've kind of been plateauing for the past year. But if you look at its recent price, that doesn't make sense. There's a lot of companies right now that have no revenue, yet the stocks are some of the best performing stocks of 2025, all based off of hype and projection. Now you have Starbucks, whose revenue has been increasing, but yet its stock price is down 40% based off of recent highs. Okay, maybe let's look a little bit more into it. Why? EPS has been on a consistent decline. EPS is earnings per share, meaning how much the company actually earns per every outstanding share. And at the end of the day, what this is telling me is that the company is not bringing in as much as it once was. And that's a red flag. Again, I like to talk about the good and the bad about companies that I'm investing in or interested in. And then when it comes down to its price, you can see its recent decline regardless of its revenue going up. So revenue has been fine. It's been on a steady climb. EPS on a decline, and its price has been on a decline. I want to buy when the price is declining, but I would love to see the EPS begin to uptick. But this is one thing I want to share with you very quickly. If we actually look at its EPS revisions for 2024 and Q4 of 2025, and then for the rest of the year, it's actually expected to go down. So this is why I would not be surprised if Starbucks, based off of analyst expectations, if Starbucks continues to sell off for even the later part of this year. I would not be surprised based off of this expectation of guidance is low for 2025. So this is why I'm saying, if your intention is to make money right now, I would not buy Starbucks. I love being straight up with you guys. I'm not here to convince you that just because I put a few $1,000s into this company that you need to. No. I don't care. I don't need you to. I'm investing into this because I see value in it. I find it to be a good enough deal. And I just put enough money into it just to have some skin in the game. And if it goes to zero for some reason, that's a price that I'm willing to pay based off of what I understand to be the deal, right? 2024, its growth year over year, a 34% decline. 2025, 22% return. Projection for 2026, 25.4% return. That's just based off of analyst expectation. I don't really put much merit myself behind that. I don't really care about what other people expect about this stock. When it comes down to the overall flow charts, this is the overall year breakdown of how this company makes money. Supposedly a big focus for Starbucks for this upcoming next year is implementing a new product, and that's protein shakes. Supposedly it could bring in close to $1 billion more a year. We'll see if that ends up actually panning out. They've also done a lot of restructuring, closing down some stores to run things more efficiently. Not too sure if some of you guys heard, but the previous CEO of Chipotle has now gone to Starbucks. And when that CEO took over Chipotle company and stock skyrocketed. I'm not here to say, I'm not like the crypto bros, oh, that happened to that company, so it now has to happen to this company. No, I think each company at the end of the day will have its own experience and its own story to tell. I'm just explaining to you where the company's current sense of direction is coming from. There has been some restructure, and if you believe in that CEO, maybe it's something to look a little bit more into. And if not, again, at the end of the day, it's all based off of results. So we're excited to follow up and see what actually happens. So this is the flow chart, overall revenue, gross profit, and at the end of the year, it ends at $2.6 billion in net profit. Is that a ton? I honestly am not too impressed with how big this company is and what they actually bring home in net profit. So hopefully that is something that they can continue to grow. I know the big focus recently and the big concern recently is not just its earnings per share, but it's its net income, its net profit, its take home. Revenue has been increasing, but its net profit has been choppy, even with all of this restructure. And this is its most recent quarter, its flow. So the previous flow chart was the net income per year, $2.6 billion. This is the net income, net profit for the quarter, right? There's 4 quarters in a year. 558 million is what they were left with. And this is the overall flow chart of Q3 financials. What else did I want to show you? This is just, again, a series of technical indicators that, again, if you put a lot of weight into them, maybe it's something to pay attention to. A lot of people are saying strong sell, moving average, strong sell, technical summary, strong sell. This is what I like to personally buy. I know I'm buying early. I know I'm just doing it with a light enough position that if things do continue to get worse, I'm okay. I can tolerate it. And I only plan to add more once direction becomes favorable, right? We'll talk about that in just a little bit. And now asking Warren AI, for those that do not know, Investing Pro does offer a Warren AI, which is pretty much like a chat GPT that's a little bit more tailored to investing or to trading. And I asked it a very simple question. What are some issues Starbucks stocks has recently faced? Is it a good stock to invest in long term? Again, I'm not asking people, sell me on the idea of investing in Starbucks. I want to know why not to. That has always been, it doesn't matter what I'm investing in, if that's the stock market, if that's investing in real estate, investing in anything. I always want to know challenges and obstacles that are set to present themselves. I want to be prepared. You can't predict the future, but you can always prepare, just like this recent downturn, right? You can't predict that markets were going to sell off quickly, but you can prepare by not being over leveraged, by having cash on the sidelines. So once markets do pull back, when they do, you're not freaking out. You're actually able to take advantage of those deals, right? Because everyone says, oh yeah, this is a great time to buy. I agree. It makes more sense to buy now than it would be a week ago. But guess what? Most people can't buy right now because they were over leveraged at overbought levels. If anything, they're actually getting margin called, which means that they're going to have to owe money just to keep their current position. That's what I'm here to avoid. Okay. So when asking this question, Warren AI responded with, Starbucks stock has nearly sunk 16% in the past year and 10% since Q3 results, a sharp contrast to the S&P's 500 5% gain. And it's because of profit outlook that has taken a nosedive, the thing that we pointed out, right? Its revenue is increasing, but its net profit is just not as high. A turnaround plan that's moving at a crawl. So stalling U.S. engine. Negative comparable stores in the U.S. are headlining worry for Starbucks. Analysts project a 3% decline for Q3 of 2025 with operation hiccups and rising costs squeezing margins. Makes sense on why their net profit is, beginning to trim. The company's back to Starbucks turnaround is showing progress, but at slower pace than what investors hoped. Again, that sucks for current investors, but for someone like myself that was not invested, I find this to be an okay time to be lightly invested or begin to be invested in this stock because I can tolerate the up and coming timeline, right? I didn't experience the 40% decline that the stock has currently experienced. I'm getting in now, which again, doesn't mean that it has to recover. I'm still ready to tolerate a 10, maybe even 20% pullback beyond this. But my position is so light that I'm okay, right? Margin crunch and profit plans. Margins have been under pressure for both rising cost of coffee and labor costs, and the company's premium price strategy, which is hitting resistance as consumers tighten belts. Net income is expected to plunge. Again, another thing that I made sure that I highlighted, 35.3% in 2025. And 9 analysts have cut their earnings forecast recently. We talked about the lower guidance, right? Store closures and restructuring. Starbucks is in the middle of a major overhaul, closing 450 to 500 North American stores, axing 900 corporate jobs, and taking $1 billion in charges to offset their investment in labor. While potentially positive for the long-term efficiency, it signals short-term pain and uncertainty. I personally like this. They're doing restructuring. They're being proactive about, pretty much trimming the fat. And sometimes when you trim the fat, you trim some muscle as well. But with that being said, yes, it makes sense on why there has been a decline and why current investors are still stressing out. And there could be more stress to come in the up and coming quarters. But I'm not the one that experienced the 40% downturn. I'm already getting in when it's somewhat cheap, although it can get cheaper. I'm ready to tolerate that in a light positioned way. And I really like how they showed this little chart. It shows that Starbucks revenue in 2021 was peaking and how we kind of have plateaued, right? We're kind of at a support. So the goal would be if it can begin to actually increase its overall revenue, then again, maybe we can get closer to where we were in 2021 of Q3. Again, something to look forward to. So on the plus side, Starbucks just notched its 16th straight year for dividend hikes, now yielding 2.9%. But it's trading at a forward P ratio of 36.6 times, a rich multiple for a company with negative forecasted EPS, which we made sure we highlighted, and recent stock underperformance. Again, something that we definitely shedded some light on. Again, if you like to invest in dividend stocks, something to look into, but dividends is not necessarily a selling point to me. It's just more of if it has it, cool. And then fair value estimates hover around $75 to $78 per share, suggesting limited upside at the current prices. Long-term bull case versus reality. The bull case hinges on menu innovation. Protein drinks, as we talked about, could add $1 billion plus to sales, global expansion, and power of Starbucks brand. But the turnaround is taking longer than anticipated. It sucks for current investors, but for me, someone that just jumped into it, or for my daughter, again, she has 18 years to tolerate it. And competitive threats are real. Financial health scores are fair at a 2.2 out of 5, and the stock is trading at its 52-week low, which again sucks for current investors. But for someone that just got into it, again, I feel like I'm in a well-positioned to tolerate it. Starbucks faces a classic turnaround dilemma. The brand strength is undeniable, but near-term pain and execution risk are high. Long-term investors need conviction, which sucks for them, but for me, don't really need much conviction, just need to tolerate a little bit more downturn. And the new products and international growth will overweight U.S. headwind and margin pressure. For now, Wall Street is split. Most see it as a modest upside unless the turnaround gains speed. And again, I think that the way that it broke this down was very useful because it shedded light on both the possibility of a recovery, but obviously the stress that recent investors have currently experienced. So now that we dove a little bit deeper, let's quickly summarize what we talked about. Is Starbucks a good buy right now? If your intention is to make money right now, definitely not. Is Starbucks a cheap stock based off of previous patterns? Technically and fundamentally speaking, yes. If you look into their fundamentals, revenue is still growing. Earnings per share expectation is expected to decline. So you can't be surprised that more downturn can happen, which is why I expressed that very early on, and which is why my position is so light. When would I add more to Starbucks? Once it actually begins to indicate signs of growth. That simple. That's the only time that I would actually plan to add more. Once Starbucks finds a support right after selling off, and it begins to find its support and begins to uptick, at that point, if price action supports it and direction becomes bullish and favorable, if it begins to make me money or makes my daughter money, then at that point, I can double, triple, quadruple, just begin to add more to this position. It's one of her smallest positions. It's just, again, a big name, a good company with good revenue, that is currently experiencing a downturn, I'm able to pick it up for a fair deal, and I will only add more once direction becomes favorable. That's all, right? Recovery potential at the current levels is right around 47%. Downside potential based off of previous lows is right around 12%. I like the risk to reward on the technical, and I like the recovery potential both on the technical and on the fundamental. And that's why I decided to invest a few $1,000s into SBUX for my daughter's investment account. So you guys let me know down in the comment section what you think. Again, I'd love to make more videos about this as I invest for my daughter and my newborn son. And I want to remind you, just because I chose to invest in any of these companies for them does not mean that you should just blindly do the same. The goal out of this entire video is, first off, if you do have kids, maybe look into how you can get them started early on. Some money and some positions are better than no money and no positions. We're never going to get it perfect. There's going to be some good investments. There's obviously going to be some bad ones. All we can ever do is talk about the good, but also make sure that we make ourselves aware of some of the bad, right? And at that point, as long as we're open to having open dialogue with the people that we value, both conservative and aggressive investors and traders, then at that point, I feel like we're just doing our best part to be well informed and make more informed investment and trade decisions. And that's all I'm here to do. So again, I hope that you guys enjoyed this video. If you did, please consider dropping a thumbs up and subscribing. I would love to do my part in keeping you guys up to date. Don't forget, if you want to download Investing Pro, you can get 15% off by using the first link in the description down below. If you have any questions about that, comment down below. And don't forget, if you also want to watch me trade live as soon as Monday, I trade live every single morning, especially if you're a complete beginner. LPP is designed just for you. We have a big discount link for you, and it's the second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.